Good afternoon, everyone. My name is Rich Swerbinski. I'm the former president of the Mortgage Collaborative, now working again with TMC and strategic advisory and growth role. And I'm thrilled to be back on the Last Week in Mortgage Today. I think I started this show like 10 years ago, if I'm not mistaken. So it's great to be back and just in general to be more involved with the Mortgage Collaborative. So I want to thank everybody for joining us. And we've got a great guest today, hopefully a great discussion. And as always, any feedback, comments, bring them in the chat and we'll incorporate it into the show unless it stinks, then we won't. So there you go. But this week, really pleased to be joined by the founder and CEO of Premier Plus Lending, TMC member, their CEO, Artan Babayan. Artan, thank you so much for joining us, and looking forward to the conversation.
Yeah, thanks, Rich. It's a pleasure to be here. So
So your story, we got to get into this right out of the gate here. I mean, you started this company 3 years ago. It's like the worst possible time ever to start a mortgage company, maybe. Yet you've had great success. I mean, it's kind of amazing what you've done really these last 3 years. So if you could give us a little bit of the backstory of Premier Plus and just where you're at with everything.
for sure, yeah. And so I've been in the mortgage industry for about 22 years. My first job at 19 was a intern at Countrywide. So it's always like a good pedigree. And so went made a couple stops, ended up being at like Prime Lending, and I was there for 11 years. It was a great company. I learned a lot from a lot of good people. Over time, grew myself to be like their top loan officer in the nation. My biggest year was 2021. I did $300 million in loans. It was
Damn.
about, and it was 60% purchase, 40% refi. I always focused on purchase business. And that afforded me to create a relationship with a real estate office that was kind of small at the time. I mean, not small. They had like a couple hundred agents, but I saw something in what they were doing, and I said, I want to work with them. And part of it was like I needed to really for that to create a deep relationship with that and do it the way that I wanted to do. I had to open up my own company. And
Mhm.
so in October 2023, I have a team about like 9 people, and we all left, started Premier Plus Lending. That's when we opened up the doors. Um, Started purely as broker and led to like this non-delegated version of things. And then the next piece is now I brought in people to help build out underwriting,
Mhm.
so we can go fully delegated. So we started with like 9 people. We're up to about 52 people. Um, our first full year of 2024, we did 250 million. Last year we did 500 million, and then this year we're on pace for about 800. So we're just seeing some good growth and adding some good people. So.
So, I mean, it's obviously been a very challenged purchase market these last 3 years. I mean, what's been the key? What would you say has been the key to growing it through, the teeth of a market that's been really challenging to a lot of lenders?
Yeah, I mean, so we're in Los Angeles, and what I decided was like, let me lean into something that is not as like price sensitive and where I can really add value. And so like where I really built our business around is non-QM. And so I think a lot of places non-QM makes up like 5 to 10% of the production.
Hmm.
Ours is, I was looking at the numbers yesterday, we're about 43% of our production is non-QM.
There you
So
go.
just really lean into that, and that's been very prevalent in our local market, very useful. There's a lot of and people in LA don't have just like one job and like have a normal life. They have like 4 jobs and a side gig and get paid cash, and it's all just like chaos. So it just kind of like fits within our market really well.
I love it, and just the great people you've had. What are the characteristics that you're looking for in loan originators and salespeople that you think has helped the company really outperform the market?
Um, so one of the things I actually look for is like if they're kind. Like I don't want anybody here that's like has a crazy ego or just kind of pushes bullies their way around. It's like I think that's what's it's a slower path because like you can just hire people, but it was like it really gains momentum over time because then you have a really good group of people and then that brings in other really good people. So I think that was an important part of it. And then I look for people that have the ability to kind of like look internally. So it's like if I'm talking to someone and they're thinking about how can I do better, and they think like, oh, and they able to be vulnerable enough with me that they say, oh, I could have done this, or I made this mistake, or this is where my fault is, or I keep going into the same path. Those are the people that I feel like I can bring in and grow. So like one of the best things I've done, one things I'm most proud about was like I took one guy from outside of the industry who joined me in 2019. And he is now like so no experience. He was working at BMW as a service advisor, and this year he's going to do about 130 million. And I took another guy from Chase Bank who was working on like commercial loans, just literally no mortgage experience, and took him to about this year he's on pace for about 80 million. And then, took another guy from another mortgage company. His best year has been like 15 million, and then this year he's on pace for 50 million. So it's like if I can find those people, I can really pour into them, and then I can teach them what I know, and then that way they can grow and they're happy and everyone wins.
My history in the mortgage industry, 'cause there's no feeder system for the mortgage industry. So pretty much every mortgage originator in America says, "Oh, we want to hire people with no experience and and coach it." Nobody can do it. Like 1%. What's the key? What's the secret sauce that, all the mortgage loans across America want to do this and are unsuccessful in being able to, and you've done it now big time.
So it's different. It was different at different stages. So the first guy that came over with me, literally what I did was, and this is when I was like just pure originating. Like I didn't have I managed, I had like one assistant and a processor, but I was just in the office originating all day. So what I did was I didn't have like a big office. I had like a regular office, and then I had like a little office next to me. And then I just put a hole in the wall. And then I put like a little sliding glass door. And then I just took all my phone calls on speakerphone. So he just like listened to all my BS all day, every day. Poor guy, for like 6 months, he just sat there. And then I would give him like little things to do. I'd be like, okay, run the credit or like learn how to calculate income. And then I just kind of slowly, then I was like, do my refis. And then I was like, then I started seeing him, he understood that because it's less time sensitive. I could like coach him through that a little bit more. And then I
Mhm.
started giving him a realtor and then a second realtor. And then I started just handing things off. And then soon enough, like he was able to take that leverage and create more business based out of that.
And now he's a millionaire.
Now he's making some figures, and I was like, damn,
The
that's
hole in the
pretty
wall. Who
good.
who knew? I'm honestly, I love it though. It makes sense, honestly. So that's great. I love it. So you started Countrywide. How cool when you're 19 years old. You weren't like Angelo Mazzillo's like aide or assistant, were you?
No, but I did work. So there was a guy named Alan Pozeshkin over there, and he was like
Yeah.
the big guy who did like
Oh
but
yeah.
everyone knows it. Yeah. So
Mhm.
there was like a loan officer underneath him, and then I was
Okay.
like an intern under that person. So I just
Okay.
got him
So you were
coffee and whatever, and did
uh,
what I needed to do. Yeah.
yeah, all right. So you were like a low level like mafia like group leader.
Yeah.
Yeah.
Basically, I
That had to
worked
be
for
a
I worked for a Russian guy too, so it's very like Russian mafia kind of esque. But no, it was a cool place. It's they were really good about training. And what was interesting is like 2 weeks ago, I got to have dinner with Brian Hale, and that was like a good like kind of complete thing. And so it's been cool. Yeah.
I got to meet Brian Hale like 6 months ago for the first time. Yeah, he's a really intelligent guy. I enjoyed the conversation. So
Very smart. I picked up like just I've been thinking about things he said during that conversation, and it's been, I see things differently now, and it was just one dinner, so yeah, very smart guy.
yeah, come on, in 2021, 60% purchase for real.
Yeah, yeah. I
That's
was bad at
unbelievable. How
refis. I'm
many
so bad at
refis?
minding my book. I was
How
like, I
many
could have done
refis did you?
more if I cared. Yeah.
I mean,
Um,
did you at least have somebody you could like pass up the refis that you didn't have time for to?
Yeah, that's what I ended up doing with him. So it was like
Okay.
even in bigger like even in 2020 I wasn't even doing that much refi, but he as soon as I could feed my refinances into somebody, that's when
Yeah,
my business really grew.
I see.
But
Yeah, there
yeah,
you go.
I just
And
like the hunt.
I
So
love it. Well, that's the key. I mean, I'm the same way. You gotta always be kind of hunting and just such a good general mentality. But the prime lending, I mean, how did they weep and openly weep when you told them you were leaving?
No, honestly, because I'd been there for 11 years and I was very profitable and I think I did, but
I bet they
as
still cried, but yeah, just saying, yeah.
no, I mean, I
No,
honestly it was like they're really, really good people
they
and
are. It's a great company. Yeah, I agree.
if I didn't have this opportunity, I would still be there. So,
Yep, that's
yeah.
awesome. And so, what's next for Premiere Plus? Now you've gotten this thing to 800 million into the teeth of the worst market ever. Global domination. What's that? What's next?
We got to get out of this LA market just because I'm so saturated right here because
Yep.
like it's also like the margins are really thin in
Yep.
LA. So I think just for the sake and for the health of the company, I need to start growing into other markets. So that's my next focus. Yeah, it's those and just I really like this like brokerage model that where I
Mhm.
was able to like partner with this real estate company and like they grew to like 1,000. They're at like 1,000 agents. So what it's helped me with is like it creates a moat around what I can recruit. Because if I can recruit and if I'm only looking for good producers, but then I can also throw in like hard-coded agent relationships. I say I'll introduce you to 50 producing agents that I'll also help nurture those relationships. It's something that I can do that most other mortgage companies can't. So
Yeah, it's a differentiator. And bringing underwriting in-house. I think I
yeah.
heard you say that. I mean, that is a big move. And how's that been
Yeah.
going?
Yeah, that's the next thing. I mean, it's like I'm I'm learning a lot. So I didn't really understand like all the different pieces that come into it and all the different like, you have to do QC and the HMDA reporting and like all these other pieces to it. So I brought two people in that have done this twice. So now I'm just like relying on them, but I'm learning a lot. And what I found is in this community too, and I was at the Western Secondary and like in the mortgage community, it's actually kind of cool how open people are into sharing information and giving you advice. Um, yeah. The only problem with mortgage though is if you ask five people one question, you get six different answers. So
Well,
it's
especially if it's related to, yeah, like legal compliance or RESPA or LOCOMP, you know.
exactly. Yeah,
It
it's so
seems these days you
confusing.
can find somebody to tell you whatever you want, honestly. Which is kind of sad. I'd like to see that get brushed up, but yeah. So, but we'll see. So, from a so broaden the geography. It sounds like
Yeah.
is the goal to to kind of stay with the focus on non-QM products. I would agree. They're on the I'm one of those people. I do like five different things, It's there's so much more of that now, I mean, non-QM, think what is it like probably like 10, 11% of the total market now. You said it was 43% of your business.
Yeah, yeah,
Mhm.
yeah. I think so too. It's just I think it's like a misunderstood or underutilized product, and like there's so much more liquidity there. I mean, like we're looking at like if you have somebody with like 15% down or more on like, and we live in like a high balance area, the non-QM
Mhm.
pricing is leagues of better than agency, right? And then even in like investment properties, second homes, there's like all these different situations where like non-QM actually wins, and this full
Right.
doc non-QM. So I think people just, even if you have a situation where like somebody recently when self-employed they became a partner at a law firm, they have a K1 but it's only 3 months worth, non-QM will do it, agency won't, and non-QM will have a better rate. It's just like there's
It's the free market. What that tells
yeah.
me, is one of the big problems with affordability that's really not being talked about today is just what it tells me is there's too much government fluff in the Fannie Freddie agency pricing that we see on rate sheets right now. I mean, right?
Yeah. I mean, we're paying the price, right? And it's in there, and it's like this is the little box. Whereas like here is like free market, and like
I
look at what
love
the
it.
free market has spoken and decided.
It's smart, and if you mean look at the trends on, there's certainly been some retail IMBs, the cross countries, the rates that have really grown throughout the course of these last few years. But if you kind of look, and they're able to pay signing bonuses and stuff like that, sure doesn't hurt. But if you look
Yeah.
beyond that, I mean, if you look at the companies that have really grown in the mortgage industry the last few years, it has been companies that have been focused on non-conventional products, and I think you were way out in front of that, and the proof is in the pudding. So.
Yeah, thank you. Yeah, I'm 100% on the same page. It's like how do you differentiate yourself? If you're competing on price, like you might win one day, but like 29 out of 30 days of the month, you're not going to win. So it's just like you got to find something that to add value where it makes sense. So
So true. You gotta, there's a lot of lenders out there just looking for a way to differentiate themselves. And yeah, you've definitely been able to do that. So, the broader market art, it hasn't been July and August have been pretty rough months, maybe not for you, but for the rest of the mortgage industry. I mean, how do you kind of just look at the landscape now? I mean, affordability is challenged, rates and values are still kind of high. You're out there having success and attacking, a emerging niche of the marketplace. But let's just start here. The broader, like residential lending landscape, as we get into the end of summer here of 2027, how do you kind of assess where things are at?
So the conversation I'm having with all my loan officers is like, number one, you have to be prospecting consistently. Like even 45 minutes a day, 30 minutes a day, like just do it.
Mhm.
It's like the Atomic Habits thing, like never like skip a day or never skip 2 days, you know? So I'm like, you have to keep doing that. And then the idea to me is like, as the owner is like, keep the cost low, keep the cost of origination as low as possible, not without skimping on experience either for the loan officer or the borrower, but like find a way to like run a little bit lean because it's just outpacing the market, right? Like so as like this occurs, the opportunity is, and we had bad July and August too. Like it's definitely like we did $80 million in June and then like $60 million. Like it was like a big drop off, you know? And so but everyone is feeling that and then so that tells me it's like this is the market and then the game is like how can like outlast your competitors, right? Because
Right.
people are going to keep dropping. And so it's just like you just stay in the fight, you know, and just keep adding people. Even if you're adding people and doing the same amount of production, then you're going to win as the market changes.
It's so true. It really is like the kind of outwit, outlast, outplay
Uh,
line there. I mean, not only that, but I think the big get bigger, and that's not always a good thing. I mean, for them, I mean, there are economies of scale, but companies like yourself that, can stay nimble and competitive, a lot of times, as the big get bigger, it gives you even more opportunity, maybe to add some talent there. So I love that general philosophy. Um, the vibe, you're out mostly in California on the West Coast. I feel like, at least where I am here in the Midwest, I mean, like consumer sentiment has been like the national media has kind of done a number on, consumer sentiment. There's been just so much talk the last 6 months and like worst affordability ever and rates suck and values are high and it's like even, we passed the road to housing bill a few weeks ago and, the president doesn't sign it. And then that kind of becomes the story, right? Instead of, oh my God, we finally passed housing legislation in America. What are your thoughts on just consumer sentiment right now and then how it may be on the West Coast as opposed to maybe where I'm at?
um, I think just overall, like, look, at the end of the day, it is tough. Like you can't sugarcoat it, right? Like affordability has shifted. I mean, in Los Angeles, I was talking to a friend of mine too, was like a couple of years ago, I mean, like, let's say even like in 2021, 2020, even part of 2022, like the normal housing payment, like I'd say the average was like $4,500 in our
Mhm.
market, right? Now it's like $7,500. Like
Mhm.
buying a house and like expecting that payment, because I mean the price range is like $1 million will only get you so much in this area. Like in certain areas, it's like don't even try, you know. So it's definitely shifted. The amount of the pool of buyers has shrunk, right? And so I think like the only thing that's keeping the market where it needs, where the prices haven't shifted a lot is because people have so much equity. It's not like 2008 where it's like equity drop, there's a flood of houses on the market, and then prices are going to drop. So I think we're in this for a long haul as like either wages increase, income changes, like I don't see like this institutional seller coming in and prices dropping like a rock like it did previously. It's just like a slow burn, which is like what we've been experiencing. So you can just the as an owner of the company or as a loan officer, you just have to focus on, increasing how many people you talk to. That's literally the only thing you can do that you can control. Because the government and whatever's happening, and you could say this is bad or this is good. Like you can get caught up in that, but it doesn't, you're not going to be able to do anything about it. You could talk intelligently about it. I think that's important, but like literally every day should just be figuring out how to have more real estate and lending conversations, and increasing your network. That's really all you can do.
Such simple but great advice. Just keep expanding your network and talking to more people. It really if you have a good product, and a realistic offering, I mean, it really just does come down to that, right? Is just continuing to put yourself out there more.
Yeah, yeah. I mean, look for ways to add value. Honestly, it's like we're not CPAs, but we know enough about it where we can speak and give kind of like some guidance. And so,
Hmm.
like my best loan officers, they're not called only for mortgages. They're called because I'm thinking about building an ADU. What do you think about that? Oh, like what do you think? Like, should I get a loan on my investment property? I'm trying to start a business. I'm trying to do this. I'm trying to do that. They have some broad knowledge and then have like the context to be able to like connect these people with. So it's like expand that network, find a good professional, and then not just like your product, but it's also you differentiate yourself from the market. Like they can't go to Bank of America and talk to someone and get the same kind of advice, you know?
Yep. Yeah, no, it's so true. Find ways to add value. Yeah, if
Yeah.
education, connections, Matt Ishbia jokes, yeah, it all. So this is the latest in mortgage today. I'm Rich Swerbinski. This week, really pleased to be joined by the founder and CEO of Premier Plus Lending, Arten Babayan. Arten, so much changing right now in the mortgage industry, and starting this company a few years ago, you kind of alluded to like, oh my God, like all these operations issues and figuring out underwriting. Like, yeah, I could just tell you're a hunter, So, how have you, like the credit landscape? I guess let's start there. The whole FICO, Vantage, one score, three scores. It's been the talk of the industry. My guess is you're like, I don't really care. It is what it is. I've just got to keep giving value to my people, right?
How did you know that?
I love it because that's the same thing
Yeah.
I would say, and I think our brains are wired very similarly. Yeah, but so that's your answer. I just right.
Yeah, it's just it's again, it's like, okay, I think staying ahead of product is important. Like understanding what's coming down. Like again, like understanding like, okay, the treasury is going to be buying more like long-term debt. Like knowing these things is important and then staying on top of that. But then yeah, you can only like control what you have access to. Unless you have your own money that you're lending, like you're subject to like what the market is doing. So just find that. I mean, you can maybe find one little thing to differentiate yourself in your local market, but yeah, again, you gotta take what you have and then see what you can fit in there and then just focus on that. So
Love it. Good to see our friend Jamie Roulette in the chat. Jamie, see, you could take that bank in Minnesota from zero to 800 million in just a couple years. You could do it. Just the art and blueprint. I love it. So, um, and Art, what about the technology side of the industry? Now, this is one you went from broker, you don't need as much tech. Now you're kind of transitioning to banker and in-house underwriting. I'm fascinated to hear your thoughts on the mortgage technology landscape as it currently sits.
yeah, so that's where my focus is because I feel like as a smaller company, I can focus on being tech forward. Like it doesn't take me like a year and a half to implement software, right? Like I'm small enough where it's like I can implement software pretty quickly. So it's just finding the right thing. I think the hard thing right now is like there's so many different options and everyone's doing this and that and AI this and AI that and there's so many like bells and whistles. So, but I think it's just like focus on one thing and then build your technology around that. So if our thing is like right now I'm like speed. So I'm like, okay, what can I automate? What can I do to make the loan officer's job simpler and smoother? And then build the software around that. So I think automation is really important in that. And I think there's so many tools around that. We built this portal and this platform called Airtable.
Hmm.
One of the best things I ever did was I was introduced to this very smart guy who came from software, but his mom has been in mortgage forever. That's how I met him. And so he was like a chief of staff where he came from, or like a COO role. And I brought him over here and he's looked at us and he's like, why is everything you're tracking in spreadsheets? And that's how I've done it my whole career. And he was like, there's better ways. So he really opened up my eyes to different ways you can build things. He used this platform called Airtable and basically build out like an intranet for us and a way to track loans and understand like where things are in the process and then connected it with like right now we're on Encompass. We are going to make a change probably in the next like we're figuring out where we're going to go in the next month, but figure out how to create this connection so data is going back and forth. But basically you can go to one page and see where everything is at and what's next to move. and then also have task-based processes which like reach out to like the LOA or processor or things that are there. So rather than like this person waiting for this and then the file goes from this stage to this stage, it's just like how can we create a system where like everyone's working on their pieces so that the puzzle can come together and the loan can get, CTC'd.
So you're exploring an LOS change, it sounds like, which I know a lot of people are right now in the mortgage industry. Is it to one of these more like agentic AI based systems, or is it
Yeah, yeah. I think like it's kind of crazy. Like so many people are on Encompass, like, and then you look at Encompass and then you look outside and the cars are driving themselves. And you're like, why is this like, how does this world exist with each
Well, it
other,
sounds like your friend. I've talked to
Yeah.
many people, like people that are really smart tech people
Yeah.
from outside the mortgage industry. They look at the mortgage industry and think, "Miracle."
They're like, it's
Facts are not
using
like, I mean, it's all data processing. I mean,
yeah.
really, at the end of the day, I mean, it is people truly tech forward people think it's hysterical how back in the Stone Ages we are in mortgage, right?
100%. Yeah. Like our job is literally like we're not creating, like we're not making like a widget, or we are kind of like, but we're literally taking data from here and then moving it here. That's like our whole thing. So it's like to have like a desktop application where it takes like different pieces to move things and then you have to slowly wait and you have to watch this folder moving over and then like what's possible and you see with Claude and AI and ChatGPT and all this kind of stuff, it's like that the way that's developing and moving is so much faster. Like you have to kind of look at that and see where the opportunity is. I think there is something to be said about like going way too much in in that side. It's like you can spend so much time, energy, money on like trying to build these crazy AI systems
Yep.
where like it might not get you. Like you might be better just getting a virtual assistant or something like that. So it's just you kind of have to like figure out what makes sense and just kind of lean into that rather than trying to chase every, bell and whistle.
I agree.
Yeah.
What else? Anything else just that's interesting to you as we get into the back half of the year? Things that have your attention, maybe anything you feel like is emerging in the mortgage industry, or so, a trend that we could see as we get into the back half of the year?
No, I think I honestly I feel like if I was gonna tell somebody like what's gonna be make you successful over the next 6 months or to the year is grit. It's
Mhm.
literally just grit. It's like waking up with a smile on your face and getting punched and then going home and then waking up and putting a smile on your face and going back at it. It's like if you can do that, you're better off than most of your competition. So I would just like focus on like doing the fundamentals, like showing up, like doing the prospecting, doing all the things that like the money making activities. Keep your eye on the market. Keep like you just got to do this and understand that like know that this industry is a market and it goes up and down. And I've been through a couple like little cycles at this moment at this point in my career, and it pays so much dividends when you're in the right spot and you've prepared yourself and you've created like enough market share. Like when the market shifts, it goes there. So just keep your eye on the prize and don't get lost in like all this negative news. So that's
Love
what
it.
that would be my advice to everyone.
I love it. It's great advice, and I got so much respect for companies that really grow strong through years that are tough, and I just think it really says a lot about leaders and companies, and drill a hole in the wall, evidently, of the office of your best salesperson, and then just hire some new talented people and just let them soak it in. And I love that. That was great.
It's literally like it was, I don't even, it just happened that way. And I was like, because I'm like, I'm too busy to teach. What do I do? I'm just going to take my calls on speakerphone and this guy will either pick it up or he's going to hate it and he's going to leave. So one of the two things are going to happen. So
And are you going to be at TMC Austin coming up in a month?
I am not, unfortunately. I
Okay.
wish I had another engagement, but I definitely am planning to be there next year. And I was in the community for a little bit. I took a step back. I'm so happy to be back, and I've already found so much value within this organization that I'm just, yeah. Thank you guys. It's been great. Yeah.
No, I love it. Yeah, no, I enjoyed meeting you, enjoyed the conversation today, and learned a lot, took a lot away from it. And congrats on all the success and everything you've accomplished. Again, the founder and CEO of Premier Plus Lending, Art and Babayan. Thank you for joining us on the latest in mortgage today. And yeah, all the best to you on the rest of 26.
Thanks, Rich. This was really great, and congrats on the impact that you're having. It's pretty cool. So,
I appreciate it. Yeah, very cool. Excellent. Well, have a great rest of the day and weekend, Arden, and we'll talk soon, my friend.
sounds good. Talk to you soon. Bye.
Take care.